Okay, let's jump right in. Today, we're unpacking the latest from Booking Holdings. We've got their Q2 2025 results, the conference call details, lots to get through.
Yeah, it's a really interesting snapshot of the global travel scene right now. Booking's position is pretty central to understanding it all.
Absolutely. And our goal here is, to pull out the key insights for you, not just the numbers, but the strategy, the tech, what's really driving things.
Exactly. Get past the headlines and into what it actually means.
So let's start with the big picture. Q2 2025 performance. How did they do overall?
Well, pretty strong, actually, especially considering, all the global uncertainty floating around. They beat expectations on pretty much all the key metrics.
Okay. Give us some highlights.
Right. So room nights hit 309 million. That's up 8% year over year.
8%. And I think you mentioned that was better than they guided for?
Yeah, it exceeded the high end of their own forecast, which suggests travel demand was maybe more robust than even they anticipated.
Okay. And what about the money side? Bookings, revenue?
Gross bookings were up 13% year over year, or 9% if you strip out currency effects. Constant currency, they call it.
Right. Important distinction.
And revenue followed suit, up 16%,
That's
or 12% constant currency. So solid growth there.
And profitability, that's always a key one.
Oh, yeah. Adjusted EBITDA saw a big jump, up 28% year over year to $2.4 billion.
28%. Wow. That's significant profit growth.
It really is. And adjusted earnings per share, EPS, that was up 32% to $55.40.
So strong top line, even stronger bottom line. And cash flow, how are they looking there?
Very healthy. They generated about $3.1 billion in free cash flow just in the quarter.
3.1 billion, also up significantly year over year.
Yep, up 32%. And they ended the quarter sitting on $18.2 billion in cash and investments.
Okay, that kind of war chest gives them a lot of flexibility, doesn't it?
Exactly. It means they can invest, they can return cash to shareholders, they can weather storms. It's a real position of strength.
Got it.
Mhm.
So strong quarter overall. Let's break it down by region. Where did the strength come from?
Well, Europe and Asia were the standouts. Asia, in particular, saw low double-digit room night growth.
That's interesting. We keep hearing about Asia being a major growth engine for travel.
It is, and Booking seems really well positioned there. They expect it to be the fastest-growing major market, high single-digit growth medium term.
And they have that two-brand strategy there, right? Agoda and Booking.com.
Exactly. Agoda is often seen as more, mobile-first, maybe stronger with local Asian travelers, while Booking.com has that global reach. It's quite nuanced how they use both. Supported by a huge local workforce, localized content, payment methods, it helps them really outperform the market average there.
Okay, that makes sense. Now, what about the U.S.? The script mentioned it was the slowest growing region.
Yeah, still the laggard, low single-digit room night growth. It did improve a bit from Q1, and they say they outpaced the wider U.S. accommodation industry, but still slower.
Why do you think that is? What's happening differently in the U.S. market?
Well, they pointed to a few things. Lower average daily rates, ADRs, the price per room night, basically. Shorter trips, too, and people booking closer to their travel dates, shorter booking windows.
So it sounds like maybe U.S. consumers are being a bit more budget conscious or perhaps uncertain about the economy.
That seems to be the interpretation, yeah. More careful spending, maybe opting for, shorter, slightly cheaper getaways.
It's interesting, though, because globally they said ADRs were flat on a constant currency basis if you take out the mix effect.
Right. The overall reported ADR was down a bit, but that was mostly because more growth came from lower ADR regions like Asia, pulling the average down. Excluding that mix shift, pricing held relatively steady globally.
Which really highlights the benefit of their global footprint, doesn't it? If one region slows, another picks up the slack.
Absolutely. Diversification is a huge strength for them.
Okay, so that covers the Q2 performance. Let's pivot now to the future. What strategic moves are they making to drive growth? Starting with alternative accommodations.
Right. This is a big focus. Think vacation rentals, apartments, that sort of thing. Their listings on Booking.com reached 8.4 million.
8.4 million. How fast is that growing?
Listings were up 8% year over year. And maybe more importantly, the room nights booked in these alternative places grew 10% year over year.
So faster growth than their traditional hotel business.
Exactly. It's a key growth area. They're also doing things like improving payment options for these hosts and adding a request to book feature.
What does request to book enable?
It basically opens the door to properties that maybe don't want instant booking. They want to, review the request first. It broadens the types of unique supply they can offer.
Got it. Okay, another big initiative seems to be their loyalty program, Genius.
Yeah, Genius is really interesting. It's not just discounts. It offers other perks from suppliers, and they're expanding it beyond just stays.
And it seems like it's really working. The engagement level sounded high.
Very high. Over 30% of their active travelers are now in the top two tiers, Genius Level 2 and 3.
30%. And how much business do they drive?
Get this, those top tiers account for a mid-50s percentage of Booking.com's total room nights.
Wow. So less than a third of the users are driving more than half the room nights.
Pretty much. And these members book direct more often, and they book more frequently overall. It's a really powerful loyalty engine, higher lifetime value for sure.
Okay, that makes sense. And then there's the big vision, the
Yeah.
connected trip. What's the latest there?
Yeah, this is their long-term play. The idea is to make the whole travel process seamless, planning, booking, the experience itself, flights, cars, attractions, everything linked.
And is it gaining traction?
Seems like it. Connected trip transactions where someone books multiple components grew over 30% year over year in Q2.
30% growth. That's strong.
Yeah, and it now represents a low double-digit percentage of Booking.com's total transactions, which they highlighted as a significant milestone.
Are the other parts, like flights and attractions, growing too?
Oh, yeah. Flight tickets booked were up 44%. Attractions tickets more than doubled year over year. Yeah, though they admit it's from a, pretty small base still. The direct money from attractions isn't huge yet, but they see it as key to offering that complete, compelling trip experience.
Makes sense. Keep the traveler in their ecosystem.
Exactly.
And underpinning a lot of this, especially the personalization and the connected trip, has to be AI, right?
Absolutely. They're investing heavily in AI, including generative AI.
What are some specific examples they gave?
Well, Priceline has Penny, their AI assistant. They've added things like better voice capabilities, which apparently boosted engagement and conversion.
Okay.
Kayak has kayak.ai for more personalized conversational search. And OpenTable launched an AI concierge right on restaurant pages for recommendations.
So customer-facing stuff. What about behind the scenes?
Big impact on customer service, too. They said Gen AI has significantly cut down the need for live agent contacts across their brands.
So faster resolutions, maybe happier customers, and lower costs?
That's the idea, improved efficiency and satisfaction. And they're working with the big names, too, OpenAI, Microsoft, Amazon, to stay on the cutting edge.
Right. Staying innovative. Let's talk about efficiency more broadly. You mentioned the strong profit growth. How much of that was cost control?
A good chunk. They highlighted disciplined expense management alongside the revenue beat. Marketing efficiency improved slightly, too.
How so?
Marketing costs as a percentage of gross bookings dipped a little, from 4.7% last year to 4.6%.
Doesn't sound like much, but at their scale.
Exactly. It implies maybe better brand recognition or more likely that strong direct mix from loyalty members we talked about.
Yeah.
Direct customers are cheaper to acquire.
Although they did mention spending more on social media.
Yeah, they see good returns there, so they're leaning in. It's about optimizing the spend, not just cutting.
And they have that transformation program. What's the goal there? Big savings number attached to it?
Yeah, they expect about $350 million in annual savings once it's fully rolled out. It's about streamlining operations, becoming more agile. They saved about $45 million in Q2 alone from it.
So real structural changes to improve efficiency.
Seems so. They expect to realize about $150 million of those savings this year.
Okay. And what about returning value to shareholders, capital allocation?
They were active there too. Bought back $1.3 billion of their own stock in the quarter.
$1.3 billion and dividends.
Yep, declared a $9.60 per share dividend for Q3. So showing confidence and rewarding investors.
Right. So putting it all together, what's the outlook? What are they expecting for Q3 and the rest of 2025?
Okay, so for Q3, they see steady demand continuing, but they're also cautious. They're up against tougher growth comparisons from last August and September.
Right. The post-pandemic travel boom was still pretty strong then.
Exactly. Plus, geopolitics, macroeconomic stuff,
Yeah.
the usual uncertainties.
So what are the specific Q3 numbers they guided for?
They expect room night growth between 3.5% and 5.5%. Gross bookings up between 8% and 10%.
Slower growth in Q2, but still growth.
Yes. And adjusted EBITDA between $3.9 and $4.0 billion, with margins similar to last year. So holding on to those efficiency gains.
And for the full year, you mentioned they raised guidance.
They did, yeah. Based on the strong first half, they have better visibility. On a constant currency basis, they're sticking to their long-term goals. 8% plus growth in bookings and revenue, 15% plus growth in adjusted EPS.
And on a reported basis, including currency effects.
They now expect low double-digit growth for both gross bookings and revenue for the full year.
Okay.
And adjusted EBITDA up mid-teens with margin expansion around 125 basis points or 1.25 percentage points. That margin improvement is better than they previously expected.
So despite the cautions, it's a pretty confident outlook overall for 2025.
Yeah, I'd say so. They seem to be navigating the complexities pretty well.
Okay, so wrapping this up, what's the big takeaway here? Booking Holdings seems incredibly resilient, strategically sharp.
Definitely. They're not just riding the travel wave, they're actively shaping it. The focus on alternatives stays. The power of that genius program, the connected trip vision.
And AI weaving through all of it.
Exactly. AI is becoming core to how they operate and innovate. They're building towards a future where travel is potentially much more seamless, much more personalized.
It really makes you think, though. As these AI platforms get smarter, almost predicting what you want before you do, how does that change things for us, for you as a traveler?
That's a fascinating question.
Does the perfect AI-curated trip leave any room for, happy accidents, for spontaneous discovery? Or does it fundamentally change what we even look for in travel? Something to ponder.